So, central banks. They've been around for a long time. They are slow, they're boring, and they're risk-averse. So why are central banks experimenting with digital currencies? And what is a former central banker like me doing at a company like Fireblocks, one of the fastest-growing digital asset companies in the world? To illustrate the points, I got one of my colleagues I set him a challenge, and I said to him, I want to give you a week. Show me what a CBDC can do. So he set about using Fireblocks technology to mint his own CBDC token from a fictional central bank on an EVM-compatible private chain. He then minted his own stablecoin using a smart contract he got from a library online. And so he had in his hand a GBP stablecoin tied to the CBDC reserve. He then used his stablecoin to do four things. First, he bought some ETH to store in his wallet. The price of that went down a bit last night. Then he converted to USDC and used that to send some money to a US colleague who he owed for lunch. Third, he used his stablecoin to go and buy a fraction of a carbon credit. And finally, he created an NFT to celebrate his success with this image of himself. He had a bit of fun. Now, in comparison, as a boring former central banker, all I was able to do in that week was come up with this speech. But that's okay. And it's okay that central bankers are not entrepreneurs. Central banks broadly have two responsibilities: monetary stability and financial stability. Monetary stability first is really about low and stable inflation. That's something that's very difficult for most central banks at the moment since Russia's invasion of the Ukraine. But it's also about maintaining the value of the currency. And that's why most central banks around the world also have responsibility for printing banknotes. And when you think of the responsibility for monetary stability as printing banknotes, it's easier to imagine why central banks are asking themselves the question: if consumer demand is shifting towards digital currencies, do we have a public duty to consider providing a state-backed, central bank-issued digital currency? And if so, what are the opportunities? And what are the risks? Many of the opportunities, the benefits, center around things like financial inclusion for the unbanked, and also for reducing the cost and reducing the time taken to make payments, especially for cross-border payments. And then the really interesting use cases of programmable money and micropayments become really interesting. But many of us can make instant payments today to our friends and merchants. And national CBDCs won't solve cross-border problems. At the same time, while central banks are debating the merits, stablecoins can do almost all of those things today. Going back to financial stability, that's about making sure that the financial system continues to serve the real economy for its needs in payments, borrowing, saving, and risk sharing in bad times as well as good. It also means making sure that a widely used payment method can be relied upon. Now, sadly, Terra has become a classic example of a stablecoin a payment method that could not be relied upon. It's also a classic example now of where, when central banks and regulators fail to keep up with innovation, things can go badly wrong. Thankfully, that was not used widely as a payment method for everyday payments. But if a stablecoin is used for everyday payments, then central banks and authorities need to pay attention. And that is exactly why authorities are so exercised about stablecoins. It is why the MiCA rules in Europe are so stringent for stablecoins used for payments. The US solution to this problem is probably going to say that only regulated banks can issue stablecoins. While in the UK, we'd expect something that allows both banks and non-banks to compete, while ensuring that the consumer has an equivalent level of protection with either. On the other side of the world, where the regulator has been a little bit more willing to allow some experimentation, we have had perhaps a glimpse of the future. ANZ Bank in Australia has, in the past 2 months, been the first Australian bank to issue an Australian dollar stablecoin. They've used that stablecoin to transact a 30 million Australian dollar transaction to prove its functionality, and they've used it to purchase a carbon credit. The thing is, with stablecoins, the smart contract is really easy. You can find it online, you can copy and paste it. The real challenge is trust. Why should anyone trust in the value of your stablecoin? And this is where regulated banks actually have a really big advantage over non-banks, because they've been storing funds for generations. They also have to adhere to really strict rules. And in worst case scenario, they can also park those funds at a safe and boring central bank. So, the smart contracts are readily available. Regulated banks have a bit of an edge in terms of trust in this world. Perhaps that's why we're having conversations with over 20 banks around the world who want to issue their own stablecoins. The age of the stablecoin is upon us. Today, with our partnership with Checkout.com and WorldPay, merchants can accept stablecoin payments, and the merchants can be paid, they can receive those funds instantly, no matter what time of day. And they can be unencumbered by weekends or holidays, rather than having to wait 3 days for the card company to settle. That's a marked improvement. On the flip side, creators in the digital economy can be paid out in a digital currency of their choosing, something that is more aligned with their business model, bringing in people perhaps who are financially excluded. Tomorrow, with a global ecosystem of stablecoins issued by banks, you could imagine the same benefits to be able to be available around the world via a stablecoin in the currency of their choosing, making that opportunity truly global. But commercial incentives can easily just as easily get in the way. And this is where I think central banks will step in. The truth is that people are very skeptical of governments. They're never going to accept a retail CBDC that allows a government to be able to spy on them. So I think retail CBDCs will come into play to fill in the gap where stablecoins have left in terms of privacy and interoperability. Central banks will step in and have to provide. The only central bank digital currencies that will survive in the hands of a retail customer are ones that will have anonymity attached to them. Something more like a digital banknote, where you can spend it for low transactions without any data shared at all. Rather than competing with stablecoins, they will provide an alternative that will actually have some use and deliver a public need. What's more, by virtue of the rule of law, they will be able to say that this token has to be universally accepted, and therefore becomes a layer of interoperability between all the different stablecoins. And that's where a retail CBDC could have a real role to play in the future. But we're a long way away from a digital banknote. So where are we seeing most of the action today? China already has its own version of a CBDC out there, and many other countries, small number of countries out there, much smaller countries, also have their version. Nigeria is a really good example, where although their functionality and their adoption is still low, they've really started that journey in earnest. And now they're expanding those use cases. We're also seeing really interesting pilots in the next few weeks and months from Australia, from Brazil, and India. Australia is a really neat one to think about. I mentioned before, because of the stance of the regulator, we've seen a wave of innovation in stablecoins, including from ANZ Bank, who've issued their own stablecoin. Now with the RBA's pilot, we might have a really interesting opportunity to see how a stablecoin and a CBDC can interact. And I've got strong hopes that we'll be able to see how a wholesale CBDC can back a stablecoin and all the different use cases that come alongside that. Similarly, Brazil has announced that banks and non-banks will be able to issue stablecoins backed by deposits. They've also announced a digital real, a wholesale CBDC, which will be used for streamlining interbank payments. So the pilots in 2023 will be really worth watching. It's interesting to think, though, let me go back actually, interesting to think that despite all the research taking place in the G7 countries, a lot of the tangible action is happening outside the G7. And that's probably because they have more to gain. For Nigeria and Brazil, some of the biggest benefits are from financial inclusion, and that alone is enough to justify exploring a CBDC. Add to that the potential benefits of cheaper and faster cross-border payments and remittances, and the argument is clear. India, although it has its own UPI, instant payments, it's seeing a CBDC as a safe alternative for its citizens instead of crypto. And Australia, it sees as an opportunity to leap ahead of its peers and demonstrate leadership on the global stage. So where next? Regulators around the world are currently drawing up rules for stablecoins. They will likely be strict, but the clarity that that provides, I think, will enable a proliferation of stablecoins from banks all over the world. Thereafter, and probably sooner than you might think, I think CBDCs will come into play. Central banks will issue wholesale CBDCs that will streamline interbank payments and cross-border payments. And those wholesale CBDCs will probably become the de facto backing asset for the stablecoins issued by banks. Thereafter, once the system is developed and matured and central banks have become more familiar with the technology, I think we can expect that digital banknote, the version where the central bank provides something that has a degree of anonymity and provides interoperability between the rest of the ecosystem as a final piece to the puzzle. When you describe it like that, it sounds so simple, doesn't it? But hey, I'm a former central banker working at one of the fastest growing and most secure digital asset companies in the world. So why not? Thank you very much.